All right. Good morning, everybody. Got a kind of a weird week and a busy week too. So we're going to get part of the QRA today. It'll come in at 2 o'clock and it will be a proposal on the rebalance or the refunding. On Wednesday at 8:30, we'll get the other half of it. And then Friday, we have non-farm payrolls. So kind of a big deal there. It's going to be a pretty wild week. I was just looking back and doing some analysis on the projection for this QRA announcement, and it's supposed to be an increase in bonds and notes. The last time we had an increase in bonds and notes was August 2023. You can see what we got out of that one. A straight shot to the downside all the way down into the fourth quarter QRA. And that's where everything changed and we started running back up again. So, this doesn't have to be exactly what happens this time. What's the old phrase, that they're not mirror images, but they rhyme, something like that, right? It's not, it doesn't have to go just like this, but however we go, you're definitely going to want to keep your eye on the news today at 2 o'clock to see what we get on the proposal, because it'll give us a better idea of what we're going to get on Wednesday, right? Volume sitting at 75,000. It's a little better than what we were seeing last week. No hedging activity spotted yet. Nothing out of line in the volume, really. It just looks good. We're above the volatility trigger in the 0 gamma. We're above the moving averages, the 10 and the 20-day. And we got really close to the ADR half this morning. Generally, if we get that close, we're going to just go ahead and hit it. But there's a lot of stuff up there that we're hitting already, including R1 when we look at pivot points. So we were hitting that pivot point. We weren't able to get through it. Now we're reciprocating on the other side of VWAP. The expectation is even if we do get a chance to hit that ADR half, we're very likely not going to get through it, get above it, and go higher. News can change that, or 0-day options flows can change that. Otherwise, we have at the moment what we call a typical day. If you think about the 6 types of market days that we have, one of them is called a typical day. It's where we have an initial gap, a pretty good size move in the market that sets our boundaries or our range. And then we just stay in that range for the rest of the day. Unless something changes, that's what we've got on the table so far today. Even though we didn't hit this ADR, since we got close and we sold off, it does put the other ADR on the table for today. That's 58.28 after we get through the 10-day, the 20-day, 0 gamma volatility trigger, and we get through the COG line 58.32, plus yesterday's low and yesterday's Globex low. And by yesterday, I mean Friday. All that good stuff. I wouldn't struggle too much with the idea that we didn't hit this ADR. Depending on how you calculate it or on what platform you're using, we may have already hit it, right? It's not to the penny. And in fact, you can see from its calculations, it's at 5885.93. The ES doesn't go to 0.93, right? It moves in quarterly ticks. So don't get hung up on the idea that, oh, well, we didn't touch it. We came close enough. You can count that as a tag, which puts the other side on the table. It is worth noting that the other side is completely outside of the range, but the upper edge, the one that we've already basically hit, was inside the range. It's easier to get to. So if we take a look at what we had yesterday, just in the RTH, you can see the midpoint here. Good place to focus on. If we want to tighten that up, bring it just into our own Globex session, we have that half back. Right? So that makes a pretty decent zone. Just remember, it's not to the tick anyways. If we get underneath that zone, it's very likely that we'll close the gap. The gap from where we closed Friday to where we opened Sunday night. That is a gap that needs to be resolved. All right, so we got the central pivots right now. They're overlapping. I think it'll be a little easier if we just turn one off. So we're going to hide the clouds on the week. Maybe that ain't going to be good enough. All right, so here's the daily pivot. It's a really wide channel. It is overlapping yesterday's channel just slightly. We opened underneath the pivot point, which is considered bearish, and it's why the channel is red. But we're completely outside of the channel now, and we did hit the pivot point already, so it's not an MDP. The wider the channel, the more likely it is that we don't run if a breakout occurs. The thing is, when they're talking about a breakout, they're talking about yesterday's range. For us to even get that breakout, we would have to run and get outside of this box that I just drew. Well, that's a really big box. I'm not saying that we can't do that, just that this wide channel implies that we won't do that. And that even if we do get the breakout fails and we come back inside the box. That's the base case argument for today, is that we're going to hold the range and that any breakout we get fails and we come back inside the box. That's not really hard to figure out when it's this wide of a range and we have really big economic data sitting in front of us. The markets are going to want to get that data. We've also got looming fears coming out of Japan after the vote last night. So there's also that issue. You can see there was a response in the markets, and the carry trade had significant moves to the downside. It's a really good look at what the ES could do today if they don't stabilize things a little bit. I mentioned we had already hit R1. If you turn on the floor pivots, S&R levels, you can see we've already hit it. The ranges are more expanded today than they were on Friday. So, if we can get above R1 before the open, then it's more likely we could get to R2. But if we can't get above that by the open, it's very likely we won't get through it today. Last week's point of control, 58.42. I still believe there's a cog line there. I just haven't validated it yet. It takes months of work to validate a new cog line. So it's not an official cog line. I'm not going to mark it as one. Still, I just got this nagging feeling that there's a cog at 42. Either way, we have a point of control there from last week. And right now we're tied up in this high volume zone. So a little bit of the structure that we need to get outside of. And even if we can, then we've got that point of control to deal with. I'm not really suggesting we're going to get some big, massive sell-off or anything like that. Just that we're not going to rally. We're not going to go anywhere. Hold the line, wait on data. We've got auctions today in the front end. Got economic events all week of concern. Market's very likely just going to wait to get that data, right? Even the NASDAQ being up the most. Some of the Mag 7 were up this morning. I mean, Microsoft tried to get a breakout, just not getting any sort of real follow through. Japan down 0.75%. That matches with the other charts we were looking at. And, as big as QRA is, you're not going to find it listed anywhere on any of the economic reports. You got to go to the .gov website to get it. So we got the 3-month, the 6-month, the 2-year, the 5-year. It's all in the front end, right? So you could look at like IRX or something and kind of chart it that way. Then we've got BOC governor coming out, chipping his teeth, but it's just a chit chat, right? Fireside chat very likely isn't going to say something of note, but who knows, right? It's just like when we have US members talking, they can screw up, they can be taken out of context, saying something that they shouldn't have said or get misinterpreted. And then ECB at 3:45, and this one is at a dinner in Madrid. So, yeah, shouldn't be impactful, but again, you never know. Things can happen. There was already statements coming out of Japan about the need to raise rates. This time they're trying to give a little bit of a warning. That carry trade reaction today is it's just getting started. As soon as we had the move in, was it first week of August or the first week of September, when we had that massive volatility spike and the carry trade was basically broke. Everybody was running for the exits. As soon as that settled, everybody just piled right back into it again. So maybe the warnings that they're giving will give people a chance to get out so they're not all fighting for the exit at the same time. But kind of got a feeling that they don't care. They don't believe them. Going to call their bluff and see how it goes. Ten-day, 30-minute volume profile, point of control overhead, 58.88. and the TPO is lined up in the same spot, we're not expecting that to move anytime soon. I mean, it can shift up or down, you know, from this node to that node, maybe way up here to this node, but we're not going to see it leave this zone. Not expecting any significant changes to the point of control unless we sell off completely and get outside of the range that we already have established, or of course, if we break out, right? Get above 59.30 or get below, say, 58.30, then we're not going to expect to see this point of control shift significantly away from this hot spot. We have a new VPOC line. Let's just grab one of these old ones. So what we're marking here is the point of control from Friday. And the reason we're marking it is because at the moment it's still untouched. We jumped over it completely when we opened up on Sunday night. The idea is we'll leave this line here until it gets hit. So for an example, when we had that one marked, the next day, price came down and hit it here, right? So after the day was done, we took that line off because we didn't need it anymore. We carry forward these untouched points of control because they have value. They're irrelevant. We want to keep them around. Now, the textbooks will say that you should always carry these forward, whether they've been hit or not. Knowing where yesterday's point of control is offers value and insight. I suppose I've already got enough pivot points that I don't need more pivot points. So I don't carry them forward every single day just because. I only carry forward the VPOC. But if you don't have enough pivots or you want that extra insight, then why not, right? Carry it forward. The value area high, the value area low, and the point of control. That's what the textbooks will tell you to carry forward. $10-day, 30-minute volume profile is a little difficult to carry forward, but it's a good question, right? I think if you're going to do that, you would just rather use the weekly. I think that way you can stay consistent because the 10-day ain't going to line up right. You know what I mean? Yeah. So on the daily, last week we measured this week's range, and it seemed like the volatility was a little less than we had for the week that we were in. The idea behind that is if the market expected some big events this week, that it would go sideways into those events, which would be a lack of volatility. But now we can see that the range is a little bit bigger. So they did price in some volatility for this week, slightly more than last week. It's not significant enough to make any real adjustments to our concepts. If we had come in and found, you know, that last week's range was, say, that big, and this week's range is this big, then we would be concerned and we'd want to really figure out what the heck is getting priced into the market. But the range as it is at the moment, it's really not outside the realm of normal. So it's not a big deal. We are back above the 10-day, just slightly. Mentioned that earlier. If we move to the downside, we've got to cut through the 10 and the 20 if we're going to make any real moves down. At this point, we have reset, we have corrected, and we're ready to go. You know, not to say that we're going to go up, but there's no reason that we have to continue to go down. We've already got our reset. We're still 1.8% above the 10-week, holding that steady. We've been steady since August on the last QRA. If you think about how that picture looked from the August 2023 into the November 2023 QRA, it was like a good clean shot to the downside, right? It was just a straight grind down from one event to the next. We've been running to the upside since that November QRA with a couple of adjustments a little bit here and there, but so since August, well, since September, when we had that sell-off that I was talking about with Japan and the carry trade and all that, we've gotten back above the 10 and we've held it steady. If they get the messing around and raising rates in Japan, if we get data this week the market doesn't like, I think getting a reset on that 10-week is going to be the first target to the downside. So if you want some cheap lottos, price in some puts that line up with the 10-week moving average. Just remember, they are a lottery ticket, right? It's supposed to be a very cheap trade that you're not willing to defend and that you don't care if it loses. Yeah, FOMC is next week on Thursday, oddly enough, not Wednesday. It's on the 7th. Yeah. I know, it's just weird. It's the way we roll, right? No, I wouldn't read anything into it. It's been on the books for a while, right? They didn't go in and change it for some tinfoil hat reason. All right, looking at things this morning, nat gas, energy, oil, all down, uranium, gold miners, precious metals, all down. Energy got whacked really hard once Israel retaliated, but they avoided the oil infrastructure. That had been, hyping up the prices on the fears that they would hit that oil complex. And so when they avoided that, now everything, all that fear is getting taken out. On things that are up this morning, what's Bitcoin, the Mag 7, airlines, China ADRs, technology, communications, semiconductors, consumer discretionary, all of the things that we would want to see for an S&P rally today. You got financials, technology, communications, semiconductors, the Mag 7, you got it all. You got everything you would want, including Bitcoin up this morning. This is the very definition of what we would want for one of those rip your face off rally days. There's one of those rippers. So why aren't we ripping? So it's very likely we're going to see what they call a stock pickers market, right? That we get the index is flat, waiting on data, nobody really wanting to mess with it. While on the other side of that, the algos are trading in the baskets, digging through things like XLC, XLY, XLF, picking the names out of those and running it. Yeah, we don't really have much on price either. I mean, financials look good, price and volume Utilities, price and volume are good, but look at tech, consumer discretionary, uh, consumer staples, not really all that hot. XLY, XLP up in the pre-market. This kind of goes to a rally concept, but again, where's the rally? Because we're certainly not seeing it in the broader market, right? Stuck sideways. The ES and the NASDAQ both rejected against that R1 level, dancing around VWAP. So, you know, if we're bullish out there, they haven't got the message. There's the MAG 7 lift. The size of the box represents market cap. Now we just need to set it into pre-market. So NVIDIA up, Microsoft, Meta, Google, Amazon, Tesla. You know, Apple had a little bit of negative news from Indonesia, something about rejecting Apple sales because they're not complying. Um, that ought to be resolved in a few days. They're just holding them over a barrel because they can. So they're not really down much. They're just not up with the group. Otherwise, the Mag 7s look good. The China ADRs look good. But we're not seeing it in the indexes. So certainly that can change, but it needs to. Names in the S&P down 0.5%, mostly energy, and then Boeing, because of course they're trying to raise some funds, and they're not having much luck with it. Names in the S&P that are up at least 0.5%, 28. That's a pretty good number. 28% of the S&P 100 is up at least 0.5%. That's pretty bullish. We're not seeing it in the indexes, but that can change, right? So that looks pretty good. But you then want to focus on, all right, well, what kind of names, right? Because if they're all a bunch of like healthcare and staples and that sort of stuff, then it's not going to do us much good. We've got semiconductors in there, financials, technology. Those are the risk on sectors that we would want for a rally. Names in the NASDAQ that are up at least 0.5%, 40. Now that's getting there on the bullish side. 40% of the NASDAQ 100 is up at least 0.5%. That's pretty darn good. Now, some of these semiconductor names, there's an event this week. It's kind of a weird name event. The RISC-V Summit. Whatever. That was last week's. This week, BCI CTS. Compound Semiconductor Integrated Circuits and Technology Symposium. Whew. Yeah, okay. It's in Florida. A lot of these names in there, right? It's, Texas Instruments, ADI, On, Intel, Broadcom, Marvell. It's a whole list, right? And I posted this in the chat already. You guys should already have it. You're likely to see a little bit of something out of that. And it's a 3-day event from the 27th through the 30th. But again, we're not seeing it come through yet, right? And then in the NASDAQ, names that are down at least 0.5%, 5. Nothing, right? Everything looks bullish out there. So if the indexes aren't rallying with all of this bullishness, watch out for the opposite to happen. Just like on Friday, make sure that we don't reject across the highs and start to dump, because that's the sell-off that I called on Friday when we were back here, just kind of holding the line. And the only thing that was holding us up was semiconductors. And once we lost semiconductors, well, down we went. All right. That was a really good trade through the afternoon on Friday. And it lines up perfectly with SMH finally giving up the ghost. That was the play. So this morning, if we got all these things up and the S&P and the NASDAQ can't rally, well, they better stay up, because if they start to dump, we could certainly test yesterday's lows and or begin the expansion to the downside. And it's not like we're looking for a big, massive sell-off, right? We can get below Friday's lows, start touching onto Thursday's lows. That would get us to the ADR half, 58.28. Maybe overshoot it a little bit, but we're not even looking at 5,800 as a serious contender yet, unless things start to sell off for some reason, right? We get some sort of news that really lets everything go, like QRA, in a way that the market doesn't like. Yeah. That's my take. Everybody be careful, be safe, watch the clock. I'll see y'all tomorrow.